Hello traders, today we're going to be talking about the different chart types that you may experience during your trading. We're going to talk about three main chart types, time-based charts, volume-based charts, and then just your typical everyday sort of charts. So to start out, we're just going to be talking about your normal basic charts that most people start out with trading. So if we go ahead and look at our chart types, the first one, and what most people's platforms default to, and what you've probably traded most in Alveo and other platforms, are candlesticks. Candlestick charts are one of the most common Forex trading charts, and they're composed of 3 to 4 different pieces depending on how you want to look at it. You have your wick or your upper wick, your body, and then your lower wick. The lower wick and the upper wick show the different highs and lows in which you've experienced, and the candlestick shows the open and close price. So depending on what color you set your candlesticks to, in this case bullish is green and bearish is blue, your open is going to be the lowest part of the body on a green candle, with the close being the highest part, the high being the highest part in which the wick had reached, and the low being the lowest part in which the wick has reached. On the opposite note, if you're using bearish candles, in this case the blue candles, the open will be the higher part of the candle, with the close being the lower part of the body. Your low is the same as the low on the bullish candle, with it being the lowest part of the wick, and the high as well is the same, with it being the highest point of the wick. Here we can sort of see a candlestick chart and how they operate. We can see right here we have this bullish trend. We can see where the highs and lows for each candle appeared, and we can see how much of a change happens with each individual candle. And each candle is going to represent the amount of time in whichever you have your period set as. The next type of chart is the Heikin Ashi chart. The Heikin Ashi is a Japanese created chart, and it's very similar to the candlestick charts. How the Heikin Ashi differs from a normal candlestick chart, however, is it uses different averages of the candlesticks to go ahead and figure out where exactly we're going to be putting that open or close. And it gets you sort of more of a smoother chart, and to some people they're able to recognize trends better on the Heikin Ashis. So if we look here, the Heikin Ashi open is going to be the previous bar's open plus the previous bar's close divided by 2. So the candle in which we're opening it now will sort of be placed between that previous candle right there. The close price is going to be the current open plus the current high plus the current low plus the current close, all divided by 4. And that way you're sort of getting a typical price of the candle in a way, like we've sort of talked about in some other videos concerning indicators. You're getting an area within those highs, lows, and bodies to go ahead and look at the close for. And this just makes it a little bit more smooth flowing. It incorporates those highs and lows. And then the highs and the lows of the Heikin Ashi candles are the same that we'd experience with the candlesticks. We're going to be looking for the highest point in which the Heikin Ashi candle had reached, and the lowest point in which the Heikin Ashi candle had released or had reached. And so if we go ahead and we open up a chart here, you can see this chart right here is the exact same as this chart. I took these pictures on the same pair, same time frame and everything like that. We can see just a little bit more fluidity to this chart right here, just because it's really composed of all of those averages going forward. And so these highs and lows that these wicks are reaching are going to be the same highs and lows that the wicks are reaching on a normal candlestick chart. It's just really the body of the candle that's going to differ because of that average-based model which it's going off of. Next type of chart which we'll discuss, which is just one of your normal time-based charts, is a line chart. Line chart is a very simple, it's probably the simplest of all of the charts which you'll look at, because it's just composed of one data point, whereas the Heikin Ashi and the candlesticks were both composed of 4 different price points. The line chart is just composed of 1, which is the price close. So if we go look at each point on this chart, each one of these points is a different close price, which we would have seen on the candlestick chart. One thing you can do to sort of overlay a line chart just to see what it would look like on top of a candlestick chart is if you just do a simple moving average based off of price close of a period of 1, that's exactly what the line chart will look like. And that way it'll nicely overlay on your candlestick or your Heikin Ashi chart. And you can sort of see the difference in what you would see in the line chart versus the other types of price pattern for you. You can't see the highs and lows, but you can get a rough idea of what the price open was for the previous candle based off of what the price close was of the candle before that. Since the open price of the candle you're currently on is typically pretty close to, if not, right on the close price of the previous candle. And so this way you'll be able to say, okay, here's the close price of this candle, here was the open price. The candle spans this much from open to close. However, you still have no idea the lows or the highs. So if you're interested in that line chart, like I said, the easiest thing to do and probably the best would be to incorporate that 1 period simple moving average onto a candlestick chart or a Heikin Ashi. And that way you'll be able to see those highs and lows, but you can also see just that line chart, which we want to be focusing on potentially. The next type of chart we'll talk about is a bar chart. The bar charts are very similar to the candle charts. However, instead of having a full body, it just has these lines here representing the open and the close. The open price will always be on the left side of the candle. So this line right here, this vertical line, is pretty much your wicks, your body of the candle, and your other wick. And so here's your open price. This is a bearish candle, because that right line is lower than that left line, meaning price had dropped from open to close. Whereas over here, we can see that this is our price open, price close, and this is a bullish bar chart. For a lot of people, these bar charts just sort of simplify the screen. You don't have those thick wick or the thick body of the candles throughout the whole chart. You're just able to see open, close, high, low, and there's not much else to really distract you from the price there. Another added benefit to these bar charts is we can somewhat see some examples here. If we find one like right around this area here, we can see that the close price right here was a little bit above that open price of the next bar on this bar chart. And so we can see where those jumps happen with a little bit more clarity than you'd be able to see with a candlestick chart, because since they're so wick or they're so wide and they're so tall, sometimes it's a little difficult to see the differences between the close price and the open price, which you can see a lot more clearly with these bar charts. The next one we'll discuss is the bar HLC chart. That HLC stands for high, low, close. And so all this bar chart shows you is the high price, low price, and close price. Once again, you're not able to distinguish the open price. This is very similar to the line chart. You can get a rough idea of where that open price was by the close of the previous bar. So if we go look at this chart right here, here's the close price of this bar. There's no open price, but we can pretty safely assume it was pretty close to this close price right here. Unless there's some drastic news event, that close price is going to be really close to the open price of the next candle. And so the bar HLC, once again, is just really used to filter out something else that may cause a little bit of distraction to some people. And so instead of having this just be a continuous connection of all of these lines, this bar HLC separates each individual bar for just a little bit easier to visualize for some people type of chart, which you'll see on your screen. All right, traders, so that was chart types part 1. These chart types are the most common ones which you'll come across in your trading. They concern themselves with time. Each next part is going to be based off of a certain time in which you designate in your chart. Most of them, with the exception of that line chart, show you the open, low, high, and close. Also with the exception of that bar HLC, which does not tell you that open price. But for the most part though, these are going to be the ones which you're going to experience most in your trading, in which most people use more often than not. In future episodes, we'll discuss different chart types that are based off of volume, or ones that don't care about time at all and just really care about price movement. So if you're interested in learning more about those different chart types, then be on the lookout for our next trader tips, which we release every Tuesday for you guys. But thank you all for watching, and happy trading.
To change the chart types on Alveo, right-click on the chart and scroll down to the price style. From there, you can choose the chart type of your preference. Like and subscribe to our channel to be updated on future videos.